All right, so let's take a look at what the market is telling us. And go ahead and put your stocks in the chat right now. If you're looking at Palantir Long, Google Short, whatever it is, go ahead and put your stocks in the chat right now. And we're going to be taking a look at this video, how to live on dividends and never work again, in just a couple minutes. But before we do that, I want to see what the market is telling us. And we do that by looking at the master key. Now, the master key has a few key portions here. First is the SPY. If we go over here into OVTLYR, we can see the SPY is sitting on a buy signal today on March 28th. That's when the buy signal came through. Now, this buy signal within a downtrend can absolutely be a little bit confusing. But when I see a buy signal within a downtrend, I don't look to go long just yet. What this is telling me is if I had shorts, this would be the time to take off the shorts. This would be the time to close my shorts. So in a downtrend, if you see a buy signal like this, that's really a buy to close. And then looking at over here, we can see the fear and greed heat map is around 34. And I got a new slide today. Check this out. The fear and greed heat map is sitting around 34. So we're solidly within the fear category for the S&P 500. So the SPY signal is a buy. Now let's go look at the market trend. The market trend, if we look at the SPY, we see the 10 is under the 20, price is under the 50. So your outlier trend template absolutely, what is the word I'm thinking of? Completely, that is not the word I'm thinking of. I was trying to be smart. Now I can't even remember the word I'm thinking of. Conclusively, there we go. Absolutely, conclusively is a bearish trend. Right, you got your 10 under the 20, price under the 50. Price is moving down for sure, but it has bounced in the last couple of times. It's reached this order block area. Isn't that pretty cool? Tell me order blocks don't work, right? Exactly in this area right here. So it's still a weak trend. Next on the master key is market breadth. Now, market breadth is measured by how many stocks are listed on our platform on the bull list. The more stocks that are listed on the bull list, the more the market breadth will be increasing. So we have 35 new stocks on the bull list today, including Ares Capital Corp. We've got Apple Hospitality. We've got Dividend Inc. And we've got stocks like Moody's Corp. But we have 96 names on the bear list today, 96 sell signals, like Adent PLC, we've got Albemarle Corp, we've got Allstate, and we've got A.O. Smith. So if we go look at the market breadth, we're measuring how many stocks we have buy signals for. And if we zoom in, we can see over here that it had started to go up. And I think that was due to a lot of short covering. We can see on the other side here, we did have a bullish crossover on our market breadth on March 17th. And now it looks like that might start be reversing, right? That might start maybe by tomorrow, have a bearish cross. So what I see here is a bullish SPY signal, a bearish market trend, and a soon to be bearish market breadth. Now we could look at the sector breadth, but it doesn't really matter because we're already locked out of the master key. A bearish trend, bullish breadth, which will soon turn bearish, but combined with a bullish buy signal here, that's going to lock me out. And that's okay. I don't have to trade. I can sit on cash as long as I need to because I have no FOMO. But this is what the market is telling us right now. Because it does not have a conclusive result amongst all of these, that is going to say that the market is locked up. But I want to look at some of your stocks in the chat, and we're going to start ranking your stocks, which I'm very excited about. A brand new stock ranking from strong buy, neutral, weak sell, and strong sell. And this is not, listen, as we go through these, I don't want you to think that this is a criticism on your character. This is going to be very objective. If the market is going down, if the stock is going down, if it has a sell signal, if the sector is getting weaker on the fear and greed, you're just not going to get a strong buy. Okay, I'm just telling you that right now. It's going to be very objective. But real quick, let me introduce myself. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start with less risk together as a team. So go ahead and subscribe if you haven't already. And let's go look at a few of your stocks. So Bobby wants to look at Netflix long. Now, Bobby, before we get to anything, I'm going to tell you right now, because the master key is locked up, which is why I started with that, because the master key is locked up, no stocks are going to get a strong buy from me. So let's go look over at Netflix and let's see what the data has for us, right? Let's go see what the data is telling us on Netflix. What is the market telling us? So first off, it is sitting within a buy signal. So that's a good point. It is getting more greedy. It's up to 69 on the heat map. That's nice, right? 69 is going to put it where? Oh, messed up my thing here. 69 is going to put it over here in the weak buy category already. So that's a good start. Oh, that's not what I was looking for. This one, greed value. Greed value is over in the 69. So that's a good start. So you got a buy signal. It's getting more greedy. The sector is getting less fearful. That's good. And then let's go look over here. We've got our 10, 20, 50. All of that's crossed up, although it looks like we might have, let me double check here on this other chart. Netflix. Yeah, I was afraid of that. It looked like it had crossed right back the other way. So you've got a bearish trend. You've got a buy signal. You've got the fear and greed getting more greedy. You've got the sector being less fearful. So for me, I'm going to rank this one in neutral. You've got some positive points. You've got some negative points. But for me, this is going to be, oh, that's not the right one either. This one. For me, that's going to put it right at neutral. So like I say, we're going to look at this from an objective perspective, and that's where it's going to come from. So Manny wants to look at HCA. So Manny, as we talked about, it's going to start at weak buy. It can't go up to strong buy because the master key's locked out. But let's look at HCA. All right, Manny wants to look at HCA long. So we've got a buy signal. It's getting more greedy. It's up to 58. So 58 would put it where? 58 would put it right on the right-hand half of neutral over there. The sector, however, seems to still be a little bit more greedy. Actually, it's getting more greedy in the healthcare sector right now. But it does have the 10 over 20, price over 50. So that's good. And then let's go double check for any order blocks on HCA. No, that looks pretty good here. And this is really strong leading up into earnings. I'm actually going to put this one. I mean, what all would be working against this right now is just the sector. So for me, I would actually rank HCA as a weak buy. That's a pretty good one right there. Michael wants to look at Celsius long, CELH. All right, Celsius. So we got a buy signal a couple days ago on March 21st, getting more greedy. The staples sector is also getting more greedy. In fact, right now it's at a fear and greed value of 70, which would put it here in the greed area. And like I say, the sector's going up. Let's double check for any order blocks, but this one actually could be great. We do have an order block up here around 39. You still got 10% or so, 7%, give or take, to get up to that point right there. I would give this one a weak buy as well. Like I say, no one's getting a strong buy, but Celsius looks pretty darn good. Steve wants to look at RGLD. Steve wants to look at RGLD. All right, so sitting on a sell signal right here. However, it definitely just kept on going, right? Kept on going after that sell signal came. You've definitely got a bullish trend. It's up here right around 67 on the fear and greed. So that's going to put it right in about the same spot on the greed values. You've got a neutral on the material sector. Let's go look at the chart real quick on RGLD. And nothing up there. So other than that sell signal, I mean, honestly, it's still looking really sharp to me. Just know where you're going to get out on RGLD, and I would also rank that one as a weak buy. You guys are actually pretty killing it today. Brian wants to look at HDB. HDB. HDB, nice. All right, so looking at this one here. It's got a buy signal that came within the uptrend. You can see that 10, 20, 50 was crossed up. We can see it's getting way more greedy. This is what you're looking for, right? A buy signal within an uptrend as the stock is getting more greedy. That's where you want to be. It's currently sitting at 80 on the fear and greed heat map. So that's going to move it over into the extreme greed category. So I might be looking to take off some profits on this one, on HDB. And let's look over here, HDB, if there's any order blocks on top of it. There it goes. A little slow, a little slow. Yeah, there is one. Yeah, right around 67. Now could be a great time to take some profits off the table on HDB. So for that one, I'm going to give it a weak sell. I'm going to give it a weak sell. So I hope that was useful, right? We're going to change it up a little bit. But now let's change gears. Let's watch this video. This is how to live off dividends and never work again.
If you like the idea of making cash flow without working for the cash flow, you'll love investing in dividends. And in this video, I'm going to show you how you can live the dividend lifestyle, meaning use your dividend income to pay your life's expenses. There are 7 general ways that you can generate this passive cash.
By the way, I saw this earlier, and he also is just a random guy on the internet. I thought that was so funny.
Cash flow. They are, number 1, putting your money into a high yield savings account. So if you have extra cash, you throw it into a high yield savings account, paying 2, 3, 4, maybe 5% a year in interest that you're getting for doing nothing except keeping your money in that savings account. The only problem is the value of your money is not growing. So even though you're getting some interest, it's not really beating inflation. And if it is, it might not be by that much. Number 2 is by lending your money out. If your broke cousin Bunty wants to go out and buy some Gucci, you can lend him the money to buy that Gucci wardrobe, but then you have to hope that he pays you back. So yes, you can generate some interest, but there's of course risk with lending money if you don't know how to qualify who you are lending your money to. Number 3 is royalty income. If you write a book and now it's on bookshelves and it's paying you money every month, that is a type of royalty income. Number 4 is rental income. Yes, this can be passive. In the beginning, it is not. But if you start buying rental properties and you can find a good property manager who is handling all the day-to-day work, well, now your tenants will be paying you rent. That rent should pay all of your expenses and put some money in your pocket. But it costs more money to get started as a real estate investor. It takes more headache to get started, and you got to know the right people. Number 5 is profit share. This is where you can invest into a large enough business, kind of like Shark Tank, and now you own a piece of the profits. So if a business that you own is making $1 million a year of profits and you're entitled to 2% of those profits, well, then they will be sending you a $20,000 check every single year because you own a piece of the business that is making those profits. Number 5 is what I call BIRF. Be born in a rich family. If you're born in a rich family, well, now you can just ask your parents to give you some free money. Not probable for most of us. And then number 7 are dividends. Dividend investing is now where you invest in a company that has extra cash. You can start with as little as $100. And now this company, the stock, will pay you generally every quarter, meaning every 3 months, a check, or generally deposit this money into your brokerage for doing nothing except owning the company. You don't have to go and work at the company. You don't have to worry about managing the company. You just own the right company, and then they send you a payment every quarter, meaning every 3 months, for doing nothing except owning the dividend-paying stock. I'm a cash flow investor, and one of the nice things about dividend investing is that this can be truly passive because once you find the right stock or fund, it can pay you essentially for life, assuming you made a good investment. And that's what I'm going to focus on today. Let's assume that you want $50,000 a year in dividend cash flow income passively. That's $4,167 hitting your bank account every month that you can use to pay your bills, to go on vacation, and buy you some nice extra guac.
Bro, who wouldn't love an extra $4,000 a month? Doesn't matter how much money you got in the bank account. If you could get $4,000 extra a month, I'm there. Let me have some of that.
So how do you go about actually doing this? Starting with the basics, you need to have some extra money that you can put aside to invest, because the whole idea behind dividend investing is you're investing money. And that means you have to have money that's extra that you are not spending already. So you take the extra money and then you're going to put this money into your investments. I'm going to show you how to do that in just a minute. A simple rule of thumb that you can start with is something like a 75-15-10 plan, which says for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum that you're investing. 10 cents is the minimum that you're saving. This way you always have money to save and invest, and so you don't spend all of your money. And now you take this money that you're putting aside for your investments into a fund or a stock that's paying you with cash flow every 3 months. That way you can work to achieve this dividend lifestyle. Now at this point, you might be wondering why.
Yeah. Oh, hang on. Not the best thing to stop on. There we go. I would also maybe caveat this just a bit, right? If you're putting it into savings, what kind of savings are you putting it into, right? Are you putting it into a 429, or I think whatever, 529, I don't know, whatever the one is that is locked up for your kids' education, right? In theory, it sounds great. And in fact, when my parents tried to give my kids some money, I was like, do not put it in a 529. If we need that money, like for instance, right, maybe something horrible happens and I need access to that money, the government will bar me from taking money out of that because it's earmarked for college savings. But I'm telling you, if it's a life or death situation and I need that money now, today, do not have any reason. Do not give me any sort of headache. Just give me my money. Just give me my money. So liquidity is paramount to me. Can it still go to kids' education? Absolutely. But if I'm locked out of it, I'm going to lose a gasket. Okay. And then also on the 15, I don't know all the IRS rules, and I don't claim to know either, but I know that there are restrictions on like how much you can contribute to your 401k, to your IRA, etc., which in my opinion is total hogwash, right? If you can put $100,000 into these accounts to grow tax-free, you should be able to. But of course, right, the government has to put their hands in that mess and say, no, you can only put, 7,000 or 20,000 or whatever the case is into that. And you're not allowed to touch it until you're 59 and a half, or we're going to take a penalty off of it. Come on. That kind of stuff bothers me. So when you are setting up these plans, number one, make them automated. I completely agree with what he's talking about here. Make them automated so you're not touching it. If you're touching it, you're going to say, well, I don't have to. It's like working out at the gym versus working out at home, right? This is a great example. I tried working out at home for a long time. I can't do it because when I'm working out at home, I'm like, well, I could run downstairs and look at this thing, right? I could go do the dishes, or I could go for a walk around the neighborhood, or I could go do this, or I could go do that. And it's like, I'm not focusing in on the task because I'm thinking about all the other things I could do. Whereas when I go to the gym, I have nothing else that I can do at the gym except work out, right? I'm married, so I'm certainly not, talking to any girls at the gym. I'm certainly not looking at anybody at the gym. I'm just doing my thing with my hat down, with my big old headphones on, like, leave me alone. I'm here to work out. I'm here to get these gains, and I got to bounce, right? So that in that way is set up in a way where I can't mess with it. And so for your investing and for your saving, set it up in a way that you can't mess with it. A lot of people have like employer-sponsored 401k plans. And by the way, if you're not taking advantage of that, you're basically giving up free money. I have made so much money because I had employer-sponsored 401k plans that matched it dollar for dollar. I'm like, let's go. This is free money all day. I will be glad to do that. Now, there's probably going to be a maximum that they'll do for you, but you need to max that shit out. Otherwise, you're just leaving money on the table that you'll never get back. But automate this as much as you possibly can, and it makes things a lot easier. So I like what he's talking about so far.
Cash flow every 3 months. That way you can work to achieve this dividend lifestyle. Now, at this point, you might be wondering, why would a company pay out this dividend in the first place? I'll just give you an example. In 2024, McDonald's had about $14 billion of profit. This was extra money in their bank account after paying for all their expenses, paying for all their employees, paying for all their burgers. Now, when they have this extra $14 billion in their bank account, there's 3 things that they can do with this money. They can save some of this money for an emergency, which they did. They can reinvest some of this money back into the company to create new burgers, to create new food, to create new whatever, and they did. And then they can just give away some of the money, which they also did. In 2024, McDonald's allocated a little bit more than $5 billion in dividends. That means they took a little bit more than $5 billion and just gave it away to their owners. Who are their owners? It's the investors who own a piece of McDonald's. So anybody who owned a share of McDonald's got a piece of this dividend payout. This is money that you get for doing nothing except owning a stock that's paying out this dividend. The nice thing about dividend investing, unlike real estate, is you don't need a ton of money to start. I mean, you can start investing in dividends with as little as $100. And if you do it correctly, the goal is to hopefully see the value of your shares go up and also see an increase in the dividends that you get paid out year after year after year. So how do you actually achieve the dividend lifestyle? Well, you can invest in individual stocks that pay out dividends, which I'm going to show you, or you can invest in funds, which is like a basket of dividend-paying companies, which I'm going to show you as well. Let me start by talking about some individual companies, but first, I'm not a financial advisor. I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence. And
man, I'll tell you what, I love this guy. I love him so much. Another guy who says, hey, you might make a buck or lose a buck on your trades. It's the reality, right? It's not buy this one stock and never work again. $75 here and you can retire. Oh, so much clickbait. This is great.
And never blindly trust a random guy on YouTube. Everything that I'm talking about is for example purposes only, to get you to start thinking like an investor. I'm not here to tell you what to invest in. Right now, at the time of me recording this video, McDonald's is paying out a dividend of 2.3%. AT&T is paying out a dividend of 4%. Verizon is paying out a dividend of 6%. Pfizer is paying out a dividend of 6.5%. And Google is paying out a dividend of 0.5%. Which means if you were to invest your money into any of these stocks today, and your goal is to get this $50,000 a year in cash flow from dividends passively, well, you're going to have to invest a lot of money today to achieve these goals. Let me show you what that means, and then I'm going to show you how you can make it happen sooner than you might think. You would have to invest $2.2 million into the McDonald's stock today at today's dividend yield to start generating $50,000 a year today. AT&T is paying out a bigger dividend, so you'd have to invest $1.2 million. Verizon.
Wow, that's way higher than I expected it to be.
is paying out an even bigger dividend yield, so you'd have to invest $835,000. Pfizer's paying out an even bigger dividend yield, so you'd have to invest $770,000. And Google is paying out a much smaller dividend, 0.5%, so you'd have to invest $10 million to be able to see that $50,000 a year. Now, the reason why I'm showing you this is to make a point. Not every company is going to pay out a dividend, and you have to remember why companies pay out dividends in the first place. Because companies pay out this dividend when they have extra cash that they don't know what to do with it. And when they have that extra cash, they can just give it away. So when a company is focused on growth and scale and really trying to achieve as much market share as possible, they don't want to pay out dividends because that means that's money that they can't use to reinvest back in their company. That's money that they can't use to hire more employees. That's money that they can't use to invest in research. So when companies are focused on the hypergrowth and the scale, they don't want to pay dividends. For example, Amazon was a publicly traded company for years that was not profitable. Their goal was not to make big profits so they could pay out big dividends. Their goal for many, many, many years was to invest all their money and then some with the help of debt and venture capital and other investors' money. That way they could grow as big as possible, as fast as possible, because they wanted to see their share price explode, which is what we saw happen. Sometimes it works out, sometimes it doesn't. When we talk about investing for dividends, it's a different analysis. Now, what you're looking for is not that explosion in stock price. You're looking for steady profits that companies can keep paying out and hopefully keep increasing, because that's how you get paid your dividend. Now, the reason why so many people...
Okay, this makes sense to me. This makes a lot of sense, because if you are investing for dividends, you're investing for the cash flow that the company is going to generate. So in that case, hear me out. You may want to look at fundamentals, which is not something I would ever talk about. But I can see where he's going here. I'm loving this video so far. 10 out of 10 for me.
Fail at dividend investing is because they look at these numbers and they get overwhelmed. You say, oh my God, I need so much money to be able to live this dividend lifestyle. It's going to be impossible. What's the point of me even starting? Because I don't have hundreds of thousands or millions of dollars. It's too much work. And that's the wrong way to look at it.
Well, even if you did have millions of dollars, putting millions of dollars in one stock like this could prove disastrous. Right? Let's go look at McDonald's real quick. Let's go look at, let's go over here. Let me see. Now, I have no idea what the stock price is going to be at all. It's going to be a surprise for me. There you go. So there was a point in time where investing $2 million in this was a great idea. And then there was a point in time where investing $2 million in this wasn't, right? You went sideways from October 24 to February. So like 4 months of no gains whatsoever. And then right now it's sitting on a sell signal. So for me, I have a hard time looking at it objectively because I am very biased, no doubt about that, because I want the asset price to go up. I really want the asset price to go up. And my rebuttal to anybody who's investing in dividend stocks is that if you are putting your money in the market, your investment in the market, your $2 million in the market to collect 50,000, I think you're much better off trying to trade your way to make 2.3%. Trade your way to just make just 2.3%. You could do that in the span of a week. You could do that in the span of a couple of days versus locking your money up for a year to get the 2.3%. So I don't know. To me, it's hard for me to say, yeah, lock your money up for a year to make 2.3% to get that $50,000. That's a hard sell for me. But I hear where he's coming from.
This, because the way you want to look at this isn't that you need to invest all this money today. You're building a machine. You're building out a machine that prints your money every 3 months. That's what dividend investing is. And you don't have to start with a ton of money today. The way you start is by putting a little bit of money in today. And then you put a little more money in tomorrow and the day after that. And every time you put some more money in, it spits out more money to you. And every time you get this money spit out, you take that money that you're getting and reinvest it. So you just keep putting more money in. When you get a pay raise, you put more money in. When you can save some extra money, you put some more money in. And every time you invest $1, you're buying a little bit of this machine that keeps printing you more money. And every time you get some more money, you keep reinvesting it. This is a long-term game. And if you...
Yeah, I hear you. I hear where you're coming from. But it's not like the housing market, right? Now, the housing market, I listen, I'm not a big real estate investor. Real estate is not my forte. But I understand that the housing market in general is really strong and stays really strong for decades at a time. And then, of course, we have 2008, and we might have another crash in real estate. We don't know. But you don't have market fluctuations like you would with a regular stock, right? If I bought a $2.2 million house and I only got $50,000 a year in income from it, I'd be pissed. if I spent $2.2 million to buy a rental property with maybe 4, 5, no, probably way more units than that, 12 units. How many units would that be? Let's say 2200000. There we go. And I bought a rental property that had 12 units in it, 180. So this would probably even do better than that. So let's get back to 2 million. Let's say it probably had 20 units in it, maybe even more. Because I mean, I've been to a lot of apartments that were definitely not worth $110,000 for the apartment itself. Point being, if I had 20 units and 4167 divided by 20, they were paying me $200 a month. Okay. So perfect example. You could take the $2.2 million and rather than buying McDonald's stock and having a year's worth of market risk on the table, you could buy a not real estate. You could buy a rental property with 20 units and then rent out those 20 units for only $200 a month. More realistically, you're looking at loaning them out for $2,000 a month. So multiply that by 10 and then multiply that by 20. And then you're looking more like $41,000 a year in income versus $4,100 a month instead of $4,100. It's a big difference. I like the video. I like where he's coming from, but apples to apples comparison here. I can't get behind dividend paying stocks because it doesn't make sense to me. My asset should be what I'm trying to grow, not the pittance that comes out the back of the asset.
Stick with it. The results can be kind of crazy. You can start with a little bit and keep adding to it slowly. The second thing you need to understand is the risk. You can look at all of your options here and say, you know what, I want to invest for cash flow, so I'm going to invest all my money into Pfizer. But the problem with that is if you don't keep up with the company and now you have all of your money here, if Pfizer were to go bankrupt, not only do you lose all of your dividend income, but you also lose all the money that you invested. This is why it's so important to understand risk, because there are ways to mitigate this risk as well, which I'm about to show you. By the way, if you're interested in stuff like this, I created a free newsletter called Market Briefs.
Yeah, to this point here, there's of course tax, maintenance, security, principal and everything like that. I get it for sure. And there is like, when you buy a stock, you just collect the dividend eventually is what he's trying to say here.
Every day, my team at Briefs Media calls, or number 2, investing into funds. A fund is a basket of stocks. So investing into a group of dividend paying companies as opposed to just one, because if you invest in one of these companies and
Chad, my friend, first off, I'm super glad you're here. Second off, the whole financial spectrum. Bro, I'm a finance guy to my core. Sorry, but there's definitely something to learn from all of these videos, which is why I like to watch them. And, talking about real estate in relation to investing in a stock, right? If you have money to burn, but if you have money to invest, you have the choice to do either of those, right? So it's a very viable opportunity either direction.
And the company you invested in goes bankrupt, you lose everything. You lose your dividend income and you lose the money that you invested. But if you invest your money into a fund which has dozens or hundreds or thousands of companies and one of the stocks goes bankrupt, well, you're okay because it's balanced out by some of the winners. So it requires less work and less upkeep because now you're just investing in a fund and this fund is essentially self-managing. It's managing itself so you don't have to worry about it. I'm gonna go over a few examples. Again, I'm not telling you what to invest in. These are just examples. One example is SCHD, which is currently paying,
which is a really popular stock or ETF. I'm going to call it a stock. This is such a popular stock. I see so many videos about SCHD, and I think it's because people are really taking a look at when the market is weak like this. And Chad, this is the kind of opportunities that we get to have these discussions that I wouldn't have thought of otherwise. When people look at the market like this, they're like, okay, where do I want to go? I want to go into something that pays a dividend, right? But even that, right, that's been dead money for nearly 4 months now of nothing happening. And then let's say you invested up here in November when it was around $29 a share. Now it's around $27 a share. So you've lost 10%. Hang on. Let me do the math on this. SCHD. From the high to here, 6%. You've lost about 6% of your asset. And this is why I have a hard time grasping dividend incomes, because even on his highest paying example was Verizon, I think. I mean, let's say if this was Verizon, we can get to Verizon in just a moment. But everything you would have made in your passive income and your dividends is gone within the span of just a few months. And in the span of just a few months, everything that you hoped and prayed for, that you were like, oh man, this is such a great opportunity, is gone because of market fluctuations. That's why I just can't get on. I can't get on with dividend investing, because my assets are way more valuable to me than the little dividends they'll throw off here and there. I mean, Verizon actually is a great example, right? These moves, an 11% move down, an 11% move up, 15% move down, a 22% move up. Dude, that's just throwing you all over the place, right? And if you're just praying for that 6% dividend and you're watching 11% of your investment evaporate and then it comes back, and then 20% of your or 15% evaporate and then come back, but that's not a great place to be if the only thing you want is just cash flow. I mean, I would much rather be on the right side of a trend, catch a green light over here, catch a green light, ride that until it closes under the 10, like right there, and take. I would gladly here a perfect example of why this is a perfect example as to why I don't ascribe to the idea of dividend investing right here, right? This one move from February 12th to here, the 10-20-50 was crossed over. Outlier trend template is going up. You had one close over that point right there, and that would be your green light. You let it run. You didn't catch the top, and that's okay, but you let it run until the first day it closes under the 10 EMA. You just made 7%. You made 7% in the span of 18 trading days by knowing how to trade with the trend, which is greater than the entirety of their annual dividend payout. Now do you see why I talk like this, right? Why hope and pray for the dividend and that your investment won't go down 15% in value like it did at certain points here, when you can just trade with it, collect that, get that amount, and then bounce onto the next opportunity. Or take it and go to cash for several months like we've done, and then have no risk in the market.
Out a yield of 3.5%. As a disclaimer, I'm personally invested in SCHD. And
Bender, you can do both, but the timing isn't always there, right? Like for example, that Verizon example was 18 days. So more than likely, you're not going to get the dividend in that 18-day period.
This is a fund created by Charles Schwab that invests in high dividend paying companies inside of the United States. So it has a broad basket of dividend companies in the US. The other is NOBL, Noble. This is an ETF, a fund that invests in dividend-paying S&P 500 companies. That means this only invests in dividend-paying companies that are a part of the S&P 500. The S&P 500 is a basket of the 500 largest companies in the stock market. This only looks at those companies, but then it takes it one layer deeper. It only invests in the companies that have increased their dividend every year for at least the last 25 years. So if a company is in the S&P 500 and they've only increased their dividend for the last 5 years, they're not going to be a part of this ETF. So you can see it's pretty strict. And then the third is V.
Let's just take a look at this one here, right? Noble. Now, remember, we won't know what's happening on the right-hand side of the chart until we get the Nancy Pelosi upgrade. But until then, right, you got a crossover right here. Could have bought it. I would say this candle right there. And then it works. And you get a close under the 10 right here. Right. Not the best. But even there, you made 60 basis points. And you're telling me that my entire year, I might make 2%? That's not so bad at all. And you get another opportunity, a green light right there. Let it run. First close under. Call that a red light. You just made 3.5%. So in two trades, you've made more than the entirety of that annual dividend right there on the same stock. And if you had options on it, you could have made significantly more. To me, that's just a hard concept for me.
YMI. This is a fund created by Vanguard, another large, very well-known institution that invests in high dividend-paying companies internationally. not in the United States. And so when you're international, you have a little bit more risk, more potential return, where you're investing in companies that could potentially see upside because their country is growing, their economy is growing, and they could potentially pay out higher dividends. It's not for sure because it's higher risk, but that's where the opportunity is there. Again, this is something that I'm personally invested in as well. That's why the asterisk is there. SCHD at the time we recording this video is paying out 3.5% a year. NOBL is paying out 2%, and VYMI is paying out 4.5%, which means if you wanted to achieve the $50,000 a year today, then you would have to invest 1.4 million into SCHD, 2.5 million into NOBL, and 1.1 million into VYMI. But again, that's not the game. The game is not to have $1 million or hundreds of thousands of dollars to start with today. It's to start small. Start with $100 today, then $100 next week or next month. Whatever you can, small increments. Remember, every time you invest $1, you're buying a machine that prints out some money back at you. You get paid every 3 months, and you keep consistently investing your money. Every time you get paid, you invest some money. When you get paid more money, you invest more money, and then when you get those dividends, you keep reinvesting them that way.
And I see the logic on this. I absolutely see the logic on this. But the problem is, if I take my $100 and I've invested it, and then I look at my account and it's now worth $98, and then I'm going to get my 2% dividend, I'm like, oh, great, I broke even because the price of the asset went down about as much as my dividend. This is great. Yay. That would suck, right? But if you're going into a dividend paying stock and it's trending higher and you're making money on the stock itself, you're making money on the dividends, then it's like, only price pays, baby, all day. Which is what you, at the end of the day, that's what you really want. If you're buying into these dividend investing stocks, you want them to go up, just like you want everything to go up. And to me, that is a more important metric on the investment going up than the dividend. So I actually thought that there was a really interesting video. I thought there was a lot of good information there. And that also leads me into today's member highlight over in the Discord. There was a question: can you explain why high dividend stocks like JEPI and SCHD are not a good place to park cash during uncertain times? Because all stocks are bad, but every once in a while they act right. There was another question in the Discord. I'm sorry, I'm so confused, but you're saying, oh, I talked about this one this morning. Yeah. Basically, their question was, hey, didn't you say that AMD had a bullish trend? And my response was, yeah, absolutely did. But trends change. That's why you need to know how much risk you're willing to put around the table. And I always tell you guys, you're going to make a buck, you're going to lose a buck. But every once in a while, you'll be on the right side of that trend and you're going to make, a handful of bucks. Then every once in a while, you're going to be on the right side of the trend and you're going to make lots of bucks. But you won't know until you actually get in and you start following that trend. Another question: is there access somewhere you can get the golden ticket trading strategy? I've been taking screenshots, but I'm not sure I caught them all. Easy, Daniel. So first off, you need to be over in our Discord. You get access through the Discord by getting OVTLYR. Go into the VIP Investors Toolkit, and then scroll up to the latest and greatest version right here. And there's a PDF. Now, this is a little bit outdated because we did change our fear and greed heat map, which I just haven't uploaded a new version yet. But this is about the only spot that has been changed since that upgrade, or since I uploaded that one. And then let's do one more question here from you guys. And let's see. The Native Ginger asks 10, 20, 50 for precious metals, 10, 20, 50 for everything, 10, 20, 50 all day. This was a question in this video here: which brokers give you price improvement? I would say, and I don't know, but I will say discount brokers like Robinhood are not going to be looking to help you as much as they are looking to help themselves. And it's been published all over the place how Robinhood does not give price improvements like other brokers will. I used Tasty Trade / Tasty Works for years and years and years. Got lots of price improvements. Now I'm working on Tradier, and that seems to be working really well. But I don't know which ones give price improvements. In theory, they all should. If there's an opportunity to get a better price on your trade, they should give it to you. I just don't know if they will. Are you looking at a 180-day chart or 1 year chart? I just look at the daily candles, right? It doesn't matter the scope of the zoom in, zoom outs, but daily candles is what I look at. But all of this still applies, even on a 5-minute chart, even on a 1-minute chart, right? The principles of trend trading remain the same. Let me go back up here. All right, so be sure to share your questions and your stories in the Discord. And the first rule of OVTLYR is you tell everyone about OVTLYR and hit the like button too. Now back to trading in the OVTLYR trading room. What is Outlier and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the outlier move happens. And if you're ready to save time, make money, start with less risk, you can get the Outlier annual pass for just 82 cents a day. And that's 64% off the monthly price. And if you are on the monthly plan, you can click one-click upgrade and save 64%. Definitely worth your time. Now, my style of trading using Outlier, it's called the golden ticket trading strategy, and it's where only price pays. And apparently, it's where only cash stays because the Outlier or the golden ticket trading strategy has had me in cash for a hot minute, right? We talked earlier about the master key, how it's got me locked up, and I have no FOMO for me because I'm going to continue to wait for the market to tell me which direction it's going. Right now, the trend is down, even on a big, beautiful reversal candle like this today. The trend is still down. We don't know when that's going to end, but I'm going to be looking for it on the 10 over the 20, price over the 50. Market breadth we talked about earlier, still bearish. Nothing's changed in the last little bit. And I'm going to wait for the breadth and the trend and the buy signal or the SPY buy or sell signal to all be in confluence. And once they are, that's when I'm going to be looking to start making some trades. So in the meantime, tell me what you're trading in the chat. And if you're an influencer of any size in any niche, we want to work with you. Send us an email over at support@outlier.com. And be sure to come back tomorrow where outliers like us will save time, make money, and start with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of those, and I recommend you have a fantastic day. We'll talk soon.